general. So as we know, VCs obviously inject capital into startups, but they play a much larger role, such as advisory, partnering, networking. There's a whole line of things they do. So I wanted to get the startup perspective, starting with you, Andrew, on just how your VC has helped you beyond injecting capital.
Sure. I mean, I think maybe just to take a step back, part of what anyone needs to do as an entrepreneur is you need to figure out how to fund your business, and there are lots of different ways to do that. Certainly, taking funding from VCs is one way to do that, and that's what we're going to be focusing our time on the panel. But I think it's important to say that's not the only way, and for many people, it's probably not the best way to fund your business. There's a lot of variety amongst VCs, and not all VCs are the same, but typically, to make a big broad generalization, VCs are typically looking for businesses that are going to be growing very, very quickly, where there's an opportunity for outsized returns. So that's great if that's the kind of business you want to build. You should talk to VCs as part of your fundraising strategy, but that may not be the kind of business you want to build, and that's totally fine, in which case you may want to think of other funders. So I think I just wanted to say that as we get into this panel, we're going to focus on VCs, but there's a lot of other kinds of ways to fund your business, from angel investors to so forth. So there's lots of different options.
And then for us, I'm going to kind of be representing the perspective of having a corporate VC. So our primary investor is BBVA, which is a Spanish bank that also has operations in the US. Our deposits are actually held there. Our back-end deposits, the regulated institution is BBVA. For us, having kind of access to BBVA as an investor and the holder of our deposits has been super helpful, because it allows us to influence policy and some of the operations around those deposits, which you couldn't at kind of a traditional back-end bank. The second component is just having access, really operational level access to folks that really understand banking. And so we've had access to, experts in ACH disputes, or experts in a certain vertical of legal that is just super operational. You probably wouldn't get if you didn't have some sort of strategic corporate that does that day in and day out. And then the third for us has just been having a corporate investor that understands kind of the timelines associated with building out a bank and kind of banking systems. And you can find that with some VCs. With others, they have very different expectations around kind of timeline to build and cost to build. And so we found just great strategic alignment with BBVA on that front.
Stephanie, do you want to shed some light on how Portage specifically helps startups beyond just investing capital?
Sure, and I mean, since we're talking about the modern VC, and since Andrew's already touched on one of all of the other sources of funding, I think one of the big things that I get this question a lot, especially in light of the recent, all of the money that's been raised in the ICO space through token sales. Last year in 2017, it outstripped actually the dollars raised by startups, by actual institutional VCs, which is a major trend that I'm sure we'll talk about at some point on this panel as we think about the modern VC. But I think you can get money from a lot of different sources, but the value add that a venture fund brings, and our venture fund brings specifically, is the idea of the network. And the thing that we've really, part of our thesis has really always been about trying to bring together an ecosystem of great fintech companies globally who can all work together, but also an ecosystem of great LPs that we also believe can work really closely with our portfolio companies. So we've got a fully separate team that we're standing up to actually do just that, which is encourage commercial agreements between our LPs, whether they be in the wealth management space or the insurance space, and our portfolio companies. And I think being able to offer the ability to have your first set of customers or access to our LPs' customers as part of the value proposition is, I think, a big part of what we're trying to do at Portage.
Awesome. Josh, do you want to shed some light on what
Sure.
Reciprocal offers?
Yeah. In a similar vein, we have institutions that are LPs, and that's one of the things we bring a value to companies is, testing solutions early with future customers. So that's part of the value we add. But, stepping back, our firm, we call it Reciprocal Ventures because we want to create partnerships with companies. We'll actually only invest in a company if we can actually help them and add value. The way we do that is you know, it's the people at our firm, you know, we all came out of financial services. We'd all operated in the markets that the companies we're looking at are sort of playing in, whether that's capital markets, asset management, payments, or enterprise software. And so we sort of like know those markets. We've been in those markets, have battle scars or whatever. And so, you know, mentorship and subject matter expertise, especially at an early stage, I think is really, really valuable, especially with the younger founders. And then because we've, you know, been in these seats in corporate world and startup land, you know, we have this deep network across, you know, these various industries. And so, you know, tapping those networks for talent, for customers, for additional capital as your company grows, or different forms of capital, whether that's debt financing or mezzanine financing or something like that.
I was reading, and the rule of thumb is that it takes about 400 pitches to investors before, or to VCs specifically, before a startup is invested in. So to put that in perspective, out of everyone in this room, if we were all pitching to investors, maybe none of us would be invested in, given that stat. Or to the companies on this stage, 800 others weren't. So it's just super important, this relationship, and over 90% of companies don't make it past that introduction meeting or that first pitch. So to the VCs, to help the startups in the room, what are those 3 most important things for a startup to get across in that first pitch? Josh, do you want to start with this?
Sure. It's real simple in our minds. It's 3 things. You know, the first, it's already been mentioned up here, you know, what's the problem being solved? You know, what's the solution, or what's that new experience that you think is exciting, you know, and why is this important to that particular customer? You know, the second is, you know, why is your team best fit for this opportunity? You know, what's most important to the task at hand, and, you know, how will each person help, you know, accomplish all those tasks? And number 3, it's, you know, the opportunity size. You know, how big can this get? What's the size of the market? You know, where are you in terms of timing? Are you early? Do you think you're right on time? Are you sort of late? You know, getting those 3 things across, I think, is really critical for us, and I think sets the startup up for success, getting that second, third meeting, et cetera.
Great.
Yeah, I mean, for us, I think there's 3 pretty simple questions. It's why you, why now, and why us. And that's the kind of lens that I use across all the pitches that I'm looking at. And I would say the other thing is, and I think that encapsulates a lot of what Josh actually said, but the other thing that I would note, just stepping back for 1 second, is a lot of times a pitch is a perfectly fine pitch, and it's actually probably a perfectly good business. It's just not a great business for me to invest in, because for whatever reason it doesn't fit my thesis, or I already have an investment in that space, or I have seen 5 other pitches kind of like it, and for whatever reason my thesis doesn't match the thesis that the founder has. It doesn't mean that it's not going to be a perfectly good business that somebody else is going to be able to fund. And I think that's one of the big things about venture is you need to find, you might have to go through 400 pitches to find the venture, to find the VC that's going to believe in your specific vision and have the right answer, or have that your pitch resonate with them. So it can be a pretty personal and specific thing as well. But yeah, so those are the 3 things that I would say.
Awesome. And so to turn that question around to the startups, we know how a VC evaluates a startup, but how does a startup evaluate a VC? So of the startups in this room that may look for funding in the next 12 months or so, how did you go about selecting your strategic investor, and what were the most important things to you? So was it sector specific, obviously capital injection, partners? So do you want to start, Andrew?
Sure. I mean, I think, you know, what I didn't appreciate in the beginning was just the diversity there is within VC firms, at least in terms of their goals. We can have a separate conversation about other forms of diversity, but in terms of the actual firms, how different firms can be. So if you wouldn't say, hey, like I like or don't like restaurants. You know, there's so much diversity within restaurants. There's Italian restaurants and Chinese restaurants, and there's expensive ones. There's a lot of diversity within VC firms in terms of like what they focus on, what stage of investment they want to make. You may have the best idea in the world for a FinTech business, but if you're talking to like a late stage VC that invests in, you know, B2B SaaS, they're just not going to be interested in what you're doing. So I think part of what we need to do as entrepreneurs is really like, if you get that 400 number down by really trying to be targeted in your conversations.
What we really liked about, again, BBVA as our corporate venture partner was two primary things. One is we, again, use them as kind of our back-end banking partner, and they have a layer of APIs that allow us to, kind of open accounts and perform a number of services. And identifying a banking partner that has kind of next generation APIs with our ability, again, to kind of influence policy or influence operational components on the back end was super important and really, really attractive, particularly as you look at the landscape in the US and see just a number of banks that are able to provide those services. So we thought that was a really interesting angle for us, particularly to differentiate in market where it wouldn't just be kind of a productized back-end bank that we could then kind of put a nicer front end on. And again, the second component I think I touched on before was just around timeline. Again, we needed to build essentially like everything you needed to as table stakes for a banking product, right? That's bill pay, that's kind of a number of specific verticals that take a lot of time and are super complex. And we were really looking for a partner that understood the complexity associated with that and could help us navigate that environment.
Okay, awesome. We are out of time, so thank you so much to the panel, and enjoy the rest of the conference, everyone.